In today's deep dive, we focus on SoFi stock and the surrounding market dynamics that have captivated investors in recent weeks. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert this is not a financial advice video. The financial landscape has been bustling with activity, particularly as legacy bank analysts issue revised price targets and performance downgrades for SoFi. This coordinated wave of pessimistic projections seems strategically aimed at disrupting SoFi's momentum. Despite these efforts, SoFi has demonstrated remarkable resilience, with each quarter showing steady improvements. As we approach Q4 earnings just weeks away, there's a lot to unpack regarding market trends, institutional strategies, and the opportunities available for savvy investors. The broader market has encountered volatility during these final weeks of the year. Factors such as options expirations and economic headlines have created fluctuations that often seem dramatic on the surface. Recent events like quadruple witching, a term for the simultaneous expiration of options and futures contracts on stocks and indices, have heightened market instability. This has led to unusual trading patterns, including early surges followed by steep pullbacks, which are opportunities for astute investors. SoFi has weathered this storm impressively, managing to maintain its support levels and showcasing the faith of its investor base. Quadruple witching, which occurred recently, is significant in explaining the market's erratic movements. This event often results in increased trading volumes and heightened volatility as traders close or roll over their positions. While this period may appear unsettling, it's often a precursor to calmer conditions. Many investors view these disruptions as temporary and instead focus on accumulating shares of strong-performing companies like SoFi, which continues to show long-term promise. Over the past few days, the market saw sharp reactions to inflation concerns and adjustments to interest rate expectations. Headlines suggested worsening economic conditions, but the underlying reality painted a different picture. These fears were largely overblown, with institutional players using the situation to create selling pressure and capitalize on liquidity shifts. While these tactics may cause short-term turbulence, the overall market remains in a bullish phase, and many investors see these dips as prime buying opportunities. SoFi's performance during this period underscores its strength. The stock has experienced patterns where early gains are followed by pullbacks later in the day. For example, it recently saw a 5% surge before stabilizing around the $15 mark, a level that continues to attract dip buyers. This consistent support reflects confidence in SoFi's future, even as broader small-cap stocks face challenges. Notably, other names in the market have recorded significant declines, but SoFi's relative stability highlights its potential as a standout investment. Institutional actions play a critical role in shaping market sentiment. Legacy analysts, particularly those from large banks, have issued downgraded ratings for SoFi, seemingly in an attempt to temper enthusiasm for the stock. However, their actions often contradict their words. For instance, Morgan Stanley, despite issuing bearish projections, remains one of the largest holders of SoFi shares. This discrepancy reveals the possibility of strategic manipulation, where public ratings are used to influence retail investors while institutions quietly maintain or even increase their positions. Recent data shows that significant interest exists in long-term SoFi options. Contracts for 2025, particularly those with higher strike prices, have seen notable activity. This indicates that many investors, including institutional ones, anticipate substantial gains for SoFi over the next few years. Such optimism aligns with the company's consistent growth trajectory and its ability to perform well even in challenging market conditions. Another aspect worth noting is the concentrated effort by some legacy analysts to project negativity about SoFi. Reports from these analysts often receive widespread media coverage, amplifying their impact on retail sentiment. However, a closer look at these institutions reveals that they continue to hold substantial positions in SoFi stock. For example, Morgan Stanley remains among the top holders despite issuing repeated sell ratings. This duality underscores the need for investors to dig deeper and not rely solely on surface-level narratives. As the year winds down, SoFi appears poised for continued growth. Its ability to withstand market fluctuations, coupled with strong investor interest, sets it apart in the current landscape. With Q4 earnings just around the corner, there's significant anticipation about what the company will deliver. Many believe that SoFi's consistent performance will translate into another stellar earnings report, reinforcing its position as a leader in its space. In conclusion, the current market environment presents both challenges and opportunities. While legacy analysts and institutional players may attempt to influence sentiment, the underlying fundamentals of SoFi remain strong. For investors willing to focus on the bigger picture, this could be an excellent time to capitalize on the stock's potential. As we approach the final days of the year, all eyes are on SoFi and its ability to deliver on expectations. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.